Hello and welcome to BQ Prime. You're watching IPO Adda, and my guest today is from Netweb Technologies. It's a high-end computing solutions company based out of Delhi NCR. And joining me is Mr. Sanjay Lodha, who is the chairman and managing director of the company. Mr. Lodha, thank you very much for joining us today on BQ Prime. Your IPO is opening on July 17th, closes on July 19th, price between 475 to 500 rupees, with a fresh issue of 206 odd crores and OFS of 425 crores. Tell us something about your company, what exactly you do in terms of business profile, and how do you plan to use this fresh issue?
Great. Thank you for inviting me for this talk, actually. So basically, I represent Netweb Technologies. Netweb Technologies is a 25-year-old company, okay, and it's a basically India-owned and controlled OEM into the space of high-end computing. Okay, so basically, so we are quite different than all others. What happens is that normally in India, you will normally find people into the IT manufacturing area who primarily focus into the volume manufacturing, like laptops, tablets, and all that. We are a very different kind of company, which from the very beginning have set our focus very clearly into the high-end computing domain, and we have kept a focus for this 25 years. So primarily, actually, we do a full stack of products. Actually, we design our products, we manufacture our products, we have our own software stack, we have our own services stack. So it's completely end-to-end, actually. So that basically helps us to leverage upon it. And plus, basically, we are completely Make in India OEM. All our products are basically certified basically for Make in India. And Make in India has preference today in the government procurement. Other than that, we are recipient for both the PLIs, for the hardware PLI as well as the telecom and networking PLI. And our major areas of work are primarily products also, if you really see, are divided into very, very clearly focused into 6 segments. First is the supercomputing. So supercomputing, we don't do the hardware. We do the hardware and the software completely. So we have very less dependency on third party. The second segment for us is private cloud and HCI. That is, again, basically the entire software stack is from us. The entire hardware is completely designed by us. We sell it in an appliance model. So these are the 2 main segments for us. The third segment for us is AI and workstations. Actually, really speaking, we have been working on the GPUs since GPUs started being used for computing way back in 2010-11. So basically, we have a very deep understanding of GPUs. So that's the reason we have been able to develop our applications primarily very focused towards AI. And as AI is growing, so definitely this segment will grow for us. The fourth segment for us is high-end storage. So high-end storage, again, we have basically complete stack there, and we have multiple product lines as to services. Then we have data center servers. We have very innovative design solutions and servers there. Then we have basically high-end computing services. These services are primarily related to like deployment of 5G clouds, basically oil and gas kind of HPC applications. So all these kind of specialized services. So our basically business is clearly concentrated into these particularly 6 segments, which are very, very high-end and very focused. And we are among the only company in the country today who is trying to basically service and to work in at the national level as an Indian company, trying to provide all these actually locally.
I get what you said. To put it very simply, you are providing high-end products into the server space or high-end capacities or enterprise servers, right? If I have to put it very in a simpler term.
Yeah, actually, basically, servers is only a part of it. Actually, basically what happens is that servers is only part of it. Our focus is primarily into supercomputing, into private cloud and HCI, into AI and AI workstations and AI systems and workstations, and then basically on the high-end storage and then data center servers. So basically, servers is only a part of our game. We are primarily not only into servers. Our major idea is to primarily work on the high-end computing solutions. So basically, just to let you know, way back in 2004, when basically India was not getting supercomputing, there was basically because of some strategic regions, the world was not giving India supercomputing. At that point of time, we started working on supercomputing. So basically, since 2004, we deployed one of the 269 fastest supercomputer in the country called Kabru at Institute of Mathematical Sciences, Chennai. And you are already aware, in 2023, just recently we deployed Arawat. Arawat is the 75th fastest supercomputer in the world, actually. and definitely it's the largest, and it's a basically Airavat is a very different kind of story. It's not only supercomputer, it's a AI supercomputer. So basically both the areas, our AI as well as basically the supercomputing get mixed there, and basically we are able to deliver a very robust product which the country is also very proud about, the company is also proud about.
So to get your models right, you know you provide these products there, and is there a recurring income that comes to you from sale of these products, because products accounts for a large part of your revenue? So I just wanted to understand whether there is AMCs and others that get you annuity income going forward.
Yeah, actually, basically, our business model is very unique, actually. Really speaking, we definitely get some AMCs, but we really don't target the AMCs. Basically, what happens is that if you see my customers, my 50% of my customer will be government, and 50% of my customers will be high-end corporates, actually. Okay, we are normally not present into the SMB and the mid business space. So primarily, so business is spread between these two verticals very, very clearly. And now what happens is that basically, as the technology keeps on changing, you see your mobile phone in 3 years, how it basically changes, your laptop also changes. Same way on the high-end computing, the changes are much more there. So basically, whatever processor I am using today, and it's delivering you a particular power, after 3 years, the power delivered by that particular machine, where basically the new processor will be able to deliver you 2 times to 3 times the power. So basically, the customer always wants to go for a replacement. Like he wants to replace it. Like basically, there is a supercomputer which we sold to an organization, one of the large Indian space organization. We sold it to them in 2019. So that was sold to them, and currently in 2023, they are again basically buying a new supercomputer, which basically has got almost all 3 to 4 times of the power what they had bought in 2019. So the application scales up, which requires more computing, and the technology changes. So basically what happens is that the same customers whom we have sold something, basically they come back to us again after 3 years to 4 years for getting basically a new solution, actually. So it becomes a new sale for us. So rather what we do is that rather than targeting the AMCs, we want to target the new sale, actually, really speaking.
Give me a sense of how your revenue growth is going to be, because if I look at your revenue jump from FY22 to FY23 from 247 to 445 odd crores, which have jumped in, is that the kind of growth rate that you're going to see going forward? Or
Yeah,
was there
actually,
a
the business.
businesses that came in
No,
FY22?
it's basically it's not like that. Actually, if you see the year prior to that, we were 150 and we went to around 247 or something of that nature. So growth
Yeah.
percentage was earlier or also there, and currently also the growth percentage is this. But I would like to answer it in a different way. You see the segments I am working in, all are growth segments. Okay, basically there is I don't see any kind of breadth of business there. If you see supercomputing has been growing. Supercomputing adoption into oil and gas, into automobiles, into media entertainment, into pharmaceutical research is really growing like anything. Supercomputing is getting into everybody's lives. So supercomputing is helping to solve all the complex problems. The other is basically as regards private cloud and HCI. You see today the countries, all the major public sector banks, they are all out with RFPs for setting up a private cloud. So basically they say that this is the era for private cloud for BFSI for next 3 to 4 years. So definitely that area is definitely going to grow. Then the third area is AI. I don't need to tell you more on AI, what kind of growth basically is projected on that area. So basically all these areas give me a very good confidence that we will do much better, actually.
So what kind of order book do you have in terms of the orders that you get from either government or non-government?
Yeah, basically, actually, my order book at present would be somewhere around, I don't remember the exact number, should be around approximately around 100 crores approximately. But basically, order book is not the right benchmark to basically model to check us. What happens is that our normal delivery cycle for a closer for our order book is around 6 to 12 weeks. So basically, as soon as it will get billed, the order book will convert into revenue. Okay, so basically, we work on a very strong funnel mechanism. And basically, we have a very strong funnel, basically, which gives me a very good confidence that basically whatever we have always been projecting only reasonable amount of percentage which we want to grow. And basically, whatever we are projecting, we'll definitely achieve that. I have no doubts in that, because the areas I am into, those areas are really wonderful wonderful. And basically, thing is that if you really see my competition, we are a very different kind of company, as I mentioned to you. We don't have a local competition. Primarily, our competition is MNCs. And MNCs, again, basically, they also, because basically we have not designed our products or not made this company so as to compete with somebody. We always wanted to address the customer issues and customer problem, and our product and solutions came in that. Like today, basically in supercomputing, we do the design of hardware, we manufacture the hardware, and we have our own software stack. Same thing in case of private cloud and HCI. And everywhere we have MNC competition. Another competition is primarily what is happening with them is that they are either a hardware company or a software company. So basically, two or three of them have to come together so as to deliver. So I
get what
that
you're
is
saying.
there.
I'm trying to understand the growth rates that you're talking about. Is that a sustainable growth rate?
I have no doubts about that.
Okay. What about the margin picture? Because on a gross margin, you are around 27%. On EBITDA is around 15% odd, which is there in FY23. Do you see enough potential to take this margin higher, since you are in a very niche area where you could command a higher margin? Or is it a very
Yeah, actually,
hyper competitive market where margins can be compressed?
no, market. If you see, basically, my competition, the MNC competition is primarily they have a gross margin of single digit, whereas I have a 25 to 27%. So I'm already enjoying a good margin because of the kind of unique factor we have set in our business, including our software, our services, our hardware, and everything together. And basically, as regards margin, I like to tell you, basically, I think it will grow slowly because, as you know, we are getting into networking. Because currently we were not into the networking switches, and they basically, if you have seen our DRHP or basically RHP, you will see that we are getting into networking, and you know basically what kind of demand networking has. So basically, like networking and AI, they will add to more margins, definitely. But basically, I personally don't feel margin going too high, but definitely maybe you can see around 2 to 3% of increase in totality because of our AI revenue, our basically services revenue, and our networking revenue. That will happen. But basically, please understand, my customers are basically very reputed, and basically they are all large enterprises. We are not into kind of a small enterprises kind of customers. So that reliability and that confidence need to be maintained. So just basically because I have a niche somewhere, if I want to just basically earn margin in a short-term way, we have not thought that way. We have always basically built it because all the customers run our solutions on production grade environments. So basically, we are really looking for customers. We scale up with them, like a supercomputing customer, a large ITES company in the country. They have been our basically a private cloud and HCI customer. But what happened is that recently they got into our AI solutions because seeing the completely the kind of adaptive AI and all those kind of things. So definitely they wanted us to help them in that. So basically what happens is that if they have confidence, they get into the newer product lines which we get into. So these kind of things actually help.
So of the 206 odd crores that you're raising through a fresh issue, what is it going to be used for?
Yeah, actually, approximately the 206 crores, we have a capex of around somewhere around 35 crores, wherein basically, as you know, the manufacturing needs to be ramped up. We are seeing a lot of traction around that. So basically, we will be setting up our new manufacturing line as well. So I think that is for that. Some around 120 to 130 crores is kept for working capital. Primarily, if you really see, these are the two major heads. Other than that, we have some small debts, somewhere around basically around 10 to 12 crores or approximately. I'm not clear about the number very clearly. So that is there. So I think that will take care of.
Why do you need a higher working capital of 128 crores, which you mentioned there in your books?
Yeah, actually,
because if you say that your lead time to supply from or to bill is 6 to 12 weeks, why is it that you need a very high working capital?
yeah, I'll tell you. Basically, if you see our revenue growing, actually, okay, the kind of revenue growth which we are seeing, that will definitely require the requirement of that will be our working capital will be needed. And as you might have seen, our receivable cycle is somewhere around 18 to 100, 80 to 100 days, because all the customers are enterprise customers. They have that kind of payment cycle. Even the government is basically, we don't work with normal government, but primarily government R&D and all that is there. So basically that kind of situation is there. And plus the kind of growth momentum which we are seeing will definitely lead that kind of working capital actually.
So I was looking at your trade receivable part of it, 151.5 crores in FY23 versus 77, nearly doubling of that. If your growth is going to grow at the same pace, you see a huge amount of growth happening in your trade receivables as well.
Yeah, actually, what happens is that the way actually I'm not a finance person. Let me tell you very clearly. So basically, I am alone answering the questions to you. Actually, otherwise my CFO would have handled it much better. But anyway, I'd like to give you my perspective. My perspective is that basically what happens is that on 31st of March, actually, because basically all this is mostly is capex purchase quite a lot actually. So what
Hmm.
happens is that the basically our business is always much better in H2 rather than H1 actually. So basically on around that time, the debtors definitely go up. But you might have also seen my results very clearly. We have no bad debts for this 25 years. Okay, so basically all the customers are very, very robust and all. So we don't have any problem with that. But primarily as regards this is therefore payment cycles will also improve. Some things will definitely happen. But I don't see personally the trade receivable days going down much lower. Maybe it may be 10 or 15 days up and down, it can happen, but will remain that. And I think the working capital calculation which my team has done, that is also there. Plus, please understand, we are generating a lot of cash. That is also basically helping me to basically fund my working capital requirements as well.
No, I get that. I get that point that you're generating cash, but it's getting eaten up by the working capital which is required. So my point is that if you are able to get this 80 to 90, is there a possibility to bring down this 80 to 100 days much further down, or it's going to remain that way?
I don't think so. It is going to come down much because basically, as I mentioned to you, the kind of enterprise customers I deal with, they all basically have those kind of payment cycles, and I really work on solutions with them. I really don't work on basically since the payment is very much secured. That's the standard cycle they maintain, so we have to adhere to that. So I personally don't feel it can come down a little bit, maybe around 10% of it, but I really
Hmm.
don't see it coming down phenomenally.
Because you also did a pre-IPO placement of 51 crores this at nearly 500 rupees per share. That's also going to be used for general corporate purposes. So
Yes.
my sense is that by the end of FY24, will you be completely net debt zero, or on a gross debt basis you will be?
Yeah, debt to debt is we have a very small debt. If you see my
You're
basically the
paying
debt
around 22 crores from the IPO
22
proceeds.
debt to equity is always going down and down. We are at a wonderful position there, and actually,
Hmm.
basically, our debt will be almost on nil or almost on negligible actually.
Mr. Lodha, my question is that you're in a very niche area, which has a very high global demand, but most of your focus has been domestic led. Uh, why haven't you been able to look at overseas territories where opportunities are much more?
Yeah, I'll tell you. Basically, it's not basically what we did was that we tested the waters. We basically during COVID, we deployed 5G cloud for some of the major telcos of the world actually in the Europe. Okay, so basically it's we already tested waters, but actually we were getting very good demand in India, plus basically the kind of things. So definitely we were doing in India. We definitely want to go outside because some of our customers are already asking us to come outside the country and to give it. But please understand, the kind of solutions we offer all are production grade. They basically I just cannot we are not into selling boxes. So what happens is that if I deliver a solution they are using for production grade, and basically they will need services. Okay, so I need hands and feet support in that country. I don't need a huge manpower there, but at least few people in those countries so as to support the solution. Because basically all these enterprise customers, if they run my solutions on an enterprise grade kind of a situation, then basically it becomes very difficult for them. In case there is a problem, it will bring a very bad reputation for us. So I want to go in a phase manner. I understand since basically we are a full stack company with software and hardware, everything from us, we can earn better margins, and basically we are getting demand also from them. So we plan to go particularly primarily around 4 countries in Europe first and Middle East. That's how basically we want to do it.
Okay. Give me a sense of your production capacity, because you are adding capex, especially into SMT, right? Surface mount technology, which is coming up in Faridabad, if I'm not wrong. But in the last 3 years, your capacity utilization has been only at 51% or 51%. Is
Actually,
it
again,
leading?
this is again. I think we have a very unique business model, Sajid. The thing is that basically we are not a capacity driven; we are capability driven company. Our manufacturing is primarily capability driven. I'll tell you. Like what happens is that
But the
yes,
products
I'll tell you.
account for a lot of
I'll
your revenues, right?
yeah, I'll tell you basically on that only. Like basically what happens is the normally or most of the SMT in India is being done from 6 to 12 layer 12 layer PCBs. In case of basically our server motherboards, the PCB is 18 to 22 layers. So there is very less facility which is available, which really can do 16 to maybe 18 to 22 layers. Even in case we are trying to do switches where even the layers are 24 layers. So this is, and they have more than 3,200 components basically populated on one particular PCB. So basically this needs complex kind of basically your infrastructure, so that that can help us. So basically for manufacturing. So primarily what we do is that we, as I told you, it is very easy for me to become a box company. I have always resisted that temptation, because basically at times in this 25 years, there has been many times, basically there has been even getting support with Make in India, we can become a box company any point of time. But we don't want to do that. We want to clearly be focused into the area, into the solution area we work. So our manufacturing capacity needs to basically improve so as to handle the latest products and the kind of products which we are planning. Like basically we are planning, if you see our DRHP very clearly, we are trying to make, even government has awarded us a PLI as well for telecom and networking. We are trying to make a Make in India complete 5G ORAN. Okay, end-to-end ORAN, that is including the hardware and the complete software stack. So that will be a very, very innovative idea wherein basically we are trying to work. So basically all these kind of new technologies which we are working, so we need to increase, basically our capability has to increase in the manufacturing. So that needs, actually, we are really not, I don't mind my lines lying vacant also, because basically the capacity doesn't matter, the capability matters for me.
So when you're putting up the PLI, you will have to have certain production targets which you have set in place, because that's based on that only you will get the incentives. So what kind of production targets that you have for those PLIs and revenue targets that you have there, and which are the markets that you're looking for?
I'll tell you. Basically, I'll answer it in a different way. Like basically for PLI, for hardware, we had for 2 years. We are among the very few companies in the country today who have completed their targets for last 2 years and claimed incentives. That was PLI 1.0 for IT hardware. Now you know that PLI 1.0 has changed to 2.0. So basically my percentage was coming down there. I enjoyed 4% in the first year, 3% in the second year, and 2% it would have come in this year. But since I'm getting into PLI 2.0, the ministry is working very closely and they are encouraging local manufacturing in a big way. So they have increased the target. I think they will be offering around 5% or 5.5% in 2.0. So my percentage gets booted again. So basically we are able to achieve all our targets and we are able to do that.
And this is primarily for exports, right?
No.
Domestic
PLI is not for export. PLI is
domestic
production link. It's domestic or exports is neutral actually.
Okay. I need to. I'm running out of time of this interview. So my final question is with respect to a non-compete that you have with your promoter, which is Netweb PTE. What kind of contours are there of this? And because it prevents you from entering any of the Asia Pac countries as well as oil and gas in the US. So what kind of opportunity loss that is available to you because of this? And is there a way to renegotiate this and get into these these countries where, the supercomputing and the opportunities are much more for you?
Actually, I think basically we read it very clearly. It's basically primarily he's my brother. And my brother basically he decided to, we have a very good relationships with him also, and basically he decided to pursue it in a different way. He wanted to basically go abroad, and they've only very limited territory he is enjoying. And basically he is again a technocrat, and primarily he is focused into some particular areas. Only we have defined the areas like Singapore, Indonesia, or some of the countries there, which are not my target markets also for my products. I have a huge market to address first, basically in Europe, US, and all those places actually. So those are the areas we are trying to do it. So I don't think non-compete is basically anyway trying to restrict me anyway. And it's a very, very limited kind of situation, which is the rest, everything is available to us. Only some few countries are not available to me.
Okay. Mr. Lodha, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime. The IPO opens on July 17th, closes on 19th. It's a price band of 475 to 500, and at the upper end of the price band, the company is valued at roughly 2,800 odd crores, fresh issue of 206 odd crores. Thank you very much for joining us on IPO Adda.
How do you make the most of the India opportunity as an investor? For that answer, all roads lead to BKC in Mumbai on the 13th of July. 3 big money managers describe the size of this opportunity. 2 of the largest mutual fund CIOs then tell you about the mega trends that they're investing in. Will the current capex cycle be similar to the one between 2003 and 2008? We get that answer from Sanjeev Sharma of ABB in a conversation with veteran investor Madhusudan Kela. And then we rounded off with two of the most prominent investing names talking about how to make the large bets and make it really big. All of this and more at the Trident Hotel in BKC on the 13th of July. Catch the action live on BQ Prime.